We are seeing this drip feed of data month by month, which seems to suggest that the property market is cooling. What is your view? Where do things stand at the moment?
It's definitely cooled. So values are down by about 0.7% from their peak at a national level, but we've been seeing declines across Sydney and Melbourne right throughout this year so far. Canberra's also seen a softer market this year, and in the other capital cities and even in the regional markets, the rate of growth has decelerated, and I think pretty soon we'll be starting to see falls, particularly in markets on a monthly basis like Brisbane and Adelaide. Perth is also slowing down quite rapidly. The two capital city markets where we're not really seeing a lot of evidence of this at the moment is Darwin and also Hobart. Hobart's a bit of an outlier because we're actually seeing conditions improve a little bit in that market.
That is interesting. So I think the big question many of our viewers will have is, where is the floor in this? When do you see that everything will start to stabilise?
I think it's going to take quite a while. I actually wrote something about this the other day. What we're looking at the moment is kind of a perfect storm of a downturn in the housing market. Inflation is still really high. There is still the possibility that interest rates could rise further from here. Obviously, there's been some significant tax changes announced to the property market, which makes investment somewhat less attractive. And usually when we do go into a downturn in the housing market, it's cuts in interest rates that actually see the market stabilise. But we're probably 12, maybe even longer than that, months away from the RBA being able to cut interest rates. So we could see prices fall 10%, maybe even more than that, before we start to see a situation where interest rates come down and the market stabilises. So I believe that this is probably going to be one of the bigger downturns we've seen in quite a few decades.
The federal government's been quite open about this. It says it's made these changes to property tax concessions in order to make it easier for first home buyers to get into the market. Are we seeing that at the moment, though? Because, of course, nobody really wants to buy in a market where things are falling pretty quickly in case they end up buying and prices drop by quite a lot.
Well, I think what we saw was when the 5% government first home buyer scheme came in late last year, there was a big shift in the number of first home buyers. Unfortunately, we only get housing finance data on a quarterly basis now. The March quarter saw a slowdown in first home buyer buying, and I think we'll continue to see that. As you said, when prices are falling, people don't want to be buying thinking, what if I waited another few months, I could have got this property cheaper. So we're certainly going to see a pullback in investors, but I think we're also going to see a pullback in activity from first home buyers. A lot of people will be staying on the sidelines waiting to try and pick the bottom of the market, which is really difficult to do. But the lack of sentiment around housing, the very stretched affordability of housing means that a lot of people just aren't getting into the market at the moment.
Because of this potential downturn or this slowing in the market, we're hearing from developers who are saying that projects that they might have been looking at doing quicker, they might put on the back burner a little bit longer. What's this all going to mean, do you think, for housing supply and also the thorny issue of rents?
Well, for housing supply, it's not great news because if established housing prices are falling, new home prices are typically higher. So a lot of people that would buy a brand new property will say, well, let's buy an established property that's cheaper. Also, obviously, the fact that inflation and interest rates are high make it harder to make new projects stack up. So it's not great news for housing supply. Housing supply will be one of the things that sees the market eventually rebound because we've still got a very rapidly growing population and we need to be adding to supply and we're not building enough new homes. So that is a problem. But in the short term, I do expect a pullback in new housing supply. In terms of the rental market, rents are still rising. There's a bit of a mixed messaging out there. The last few months, rental growth has been a little bit slower, but that is somewhat seasonal. So it's hard to get a read on what's happening with rents. But if we're not building enough housing, if we don't have a lot of first home buyers coming into the market, and if we've got fewer investors, that's going to lead to a shortage of rental accommodation and potentially put pressure on prices. The only thing I would say there is, though, rents have increased a lot over recent years. We've still got this cost of living crisis, and I just wonder how much more capacity renters do have to pay higher rents. The response might actually be to go into share housing, look at renting in a cheaper area of the city, simply because they want to live in these areas and they want to pay that rent, but they can't afford to given their financial situation at the moment.
Cameron, we always appreciate your analysis. Thanks for joining us this morning.
Thanks, James.